Did you know that experts predict a 100% increase in Tesla stock as a result of its ambitious plan? Despite a number of problems, many investors are still optimistic about Tesla stock. They have faith that Tesla will get beyond any obstacles and keep up its good performance. I doubt you would want to overlook this information. The optimism Cathie Wood has for Tesla is not new. Tesla is one of Wood's top holdings. Wood is the manager of ARK Invest funds, which include the ARK Innovation ETF. In actuality, ARK Invest, directed by Cathie Wood, has high hopes for Elon Musk's Tesla project. So much so that 10% of the fund's capitalization is represented by the stock. It makes sense because Tesla fits Cathie Wood's financial philosophies in many respects. ARK Investment Management LLC's founder, CEO, and Chief Investment Officer is Cathie Wood. When it comes to selecting stocks and spearheading investments in new technologies, Wood has established a solid reputation. Wood is frequently referred to as the most underappreciated investor in the game because, in addition to being extremely convincing in her investment ideas, she also has track record to support her remarkably astute assertions. It's also well known that Wood occasionally makes bold predictions regarding the future. She is a supporter of Bitcoin, believes that Tesla, the manufacturer of electric vehicles, is still undervalued and projects that the firm will eventually be worth $3 trillion. When she first made the statement, people laughed at her, but now that Tesla's market value is $923.77 billion as of May 4, 2022, it might not sound so outrageous. One of the reasons people follow Cathie Wood and put money into her accounts is because of these forecasts. Wood stopped Elon Musk from repurchasing Tesla's stock and taking the business private in 2018 thanks to his intervention in the form of an open letter. The letter proved to be something of a phenomenon. There, Cathie Wood presented a 5-year bull thesis for Tesla's stock, predicting a price as high as $4,000 for the company by 2023. In his early stock repurchase program, Musk was content to pay just $420 for each share at the time. If you look at the revenue growth over the last 5 years, it's compounded at roughly 48% per year, and that was, as you recall, when Tesla was experiencing quite a bit of controversy, Cathie Wood explains. Our forecast for the next 10 years is in the 50 to 60% range, depending on if you take our bull or bear case, and there are a few reasons, states Cathie Wood. Wood lists 4 entrance hurdles that appear to have increased in Tesla's advantage. Battery technology comes first. With the exception of a few in China, Wood claimed that Tesla is the only automaker that has chosen to ride the consumer electronics industry's cost curve. This is a result of the batteries used in cell phones and computers changing. Wood pointed out that automakers and auto analysts made fun of Tesla when it made that decision. Due to well-publicized battery blowups aboard aircraft, that type of battery was prohibited. Because of this, even though its current cost is lower, its battery pack system is still substantially less expensive than that of other automakers. According to Wood, the other manufacturers would lose money on electric vehicles, while their sales of gas-powered vehicles will decline if they wish to compete with Tesla. Less power or range will be the alternative, which is why there are numerous variations around it. According to Wood, Tesla's battery is still 3 to 4 years ahead of other automakers' cost reductions that resulted from their decision to switch from cylindrical to lithium-ion pouch technology. According to Wood, Tesla's own chip is the second barrier to entry and the most important one in terms of growth and valuation. According to Wood, Tesla is the only automaker whose chip design is complete. No one else followed. They lacked a personal chip. They lacked the vision, according to Wood. She said that Tesla is learning from Apple. Recall that Apple was the pioneer back then. In the cell phone market, Nokia, Motorola, and Ericsson were victorious, she clarified. Apple was the startup whose creator, Steve Jobs, had the vision that it would become more than simply a phone, rather, a computer in your pocket, and he succeeded in doing so. I will always remember how happy I was to be able to use my phone to surf the internet. Wood remarks, I just thought this was revolutionary. She thinks that Tesla is starting something groundbreaking, just like Apple. According to Wood, The reason Tesla is so far ahead of its rivals is because they are still in the early stages of their development. According to her, the vehicles they have supplied thus far don't even come close to matching the Model S range or other specifications from Tesla. The other barrier to entry is the artificial intelligence chip, which is all about autonomous, and Tesla is the only one doing this, Wood stated. Tesla's processor specs amazed its expert James Wong, who spent 8 years working for the artificial intelligence startup NVIDIA. According to Wong, Tesla is 4 years ahead of all other automakers in terms of available semiconductor technology specs. This is critical to Tesla's objective of using electric vehicles to become autonomous. Artificial intelligence initiatives are directly related to being autonomous, and the winner will have the most and the best quality data. The nearest rival, Waymo, only has 20 million real-world driving miles compared to Tesla's 14 billion. Finally, Tesla's advantage over other companies is that they are the only auto manufacturer still that delivers over-the-air software updates to modify performance, Wood concluded. The next barrier to entry is that Tesla has billions upon billions of miles of real-world driving data accumulated, according to Tesla's then AI head Andreas Karpathy. They have more corner cases to train their systems on than any other company, Wood added. It's not going to be possible for other rival companies to catch up because Tesla already has more than 1 million robots, including her Model 3, roaming around collecting data and sending it back every day. Another barrier to admission, according to Cathie Wood, is over-the-air software changes, which come as a surprise for her. Wood shared that she bought her Model 3 in 2018 and that she has never had to take it in for an issue. Tesla evidently has diagnosed any difficulties I've encountered and rectified them before I see them or experience them. The only difficulty I've encountered is a nail in a tire, and of course, software could not remedy it, but that was all, adds Wood. Those are the barriers to entry that gave Tesla the lead, according to Wood. Our basic scenario is $3,000 in 5 years from roughly $800 today. Our confidence in that has grown because what we're seeing now is Tesla able to scale EV manufacturing in a way that no one else, except potentially BYD in China, no one else is doing this yet, and Tesla had to go through a big learning curve to get there, adds Wood. Wood claimed that most other automakers are not going to be able to stay up with or approach Tesla's combination unless they want to lose money on their autos. Wood underlined that that's really essential from a performance point of view and a range point of view. When questioned about her thoughts on huge firms competing with Tesla in electric vehicle production, Wood has this to say: they are failing badly. This is not like the manufacturing of traditional vehicles. It's a whole different game. We used to say we expected Tesla will take 25% of the electric vehicle market in 5 years. Now we're saying we believe Tesla will grab 25% of the overall vehicle market in 5 years, and we think electric will be nearly half of total vehicles sold, adds star investor Cathie Wood. ARK invests open source valuation model of Tesla stock, which they believe is a more transparent way for investors to see the research that ARK Invest has done on one of its major holdings, includes updates related to autonomous ride-hail assumptions, capital efficiency estimates, and forecasts for the year 2026. Based on its model study, ARK has set a price forecast of $4,600 for Tesla by 2026. The firm's study also indicated that there is a 25% possibility that Tesla shares will be valued $2,900 in 2026 in a pessimistic scenario and $5,800 in a positive one. Tesla's capital expense per incremental unit of capacity has improved, falling from $84,000 to $7,700 earlier. ARK projected that Tesla would spend $6,000 to $8,000 per incremental unit of capacity in 2025, but now the firm believes that it will spend only $2,000 to $7,000 per incremental unit of capacity in 2026. Make sure to subscribe to this channel for additional updates on Tesla stock.